Okay, good evening. Um, so this is the trade I'm looking at this week. This is Euro USD, and it's on a 4-hour time frame. Let me put it on full screen. So it's on a 4-hour time frame. So okay, let me start from this point here. Um, Let me get to so I can point out something. Okay, so um, if you look at this zone here, there is this zone here. As you can see, this point where let me adjust it. So okay, sorry. Where so as you can see, this line that I drew, you can see it's a downtrend, and as well this is also a downtrend, right? So um, as if that's a downtrend, so I drew a line. I noticed I drew a line from this point to this point. Same thing I did here, this point to this point. So what that means is it shows that in this range here, price was going in this range. It was bouncing up and down. So whenever I see a chart pattern like that, whenever I see that okay, it is moving in a range, I was one who drew the line. Let me even remove everything. I like my charts to be very clear. So I drew this line here. Let me zoom in so you see it clearly. I drew it. So when I connected the lines, the pattern had formed already from this point. Had formed from this point. From this point to this point. So I now drew a trend line. This trend line I connected because you can see it is descending. It is making lower low, lower high, lower low, lower high. What do you make here again? Lower low, lower high, lower low, lower high, lower low. So it was making that. So at this point here, it made a higher high. Whenever you notice a higher high, it shows a break of structure. From this point, it is descending because I was one who drew this first trend line. I drew another trend line up here just to ensure that okay, this is actually a range. This was where it started. Price came to this point, bounced down, respected the trend line, went up again, took it, respected the trend line, came back down again. So this we call it an Elliott wave. We count 1, 2, 3, 4, 5. So an Elliott wave needs 5 touch points. People say A, B, C, D, E. I use 5 counts. Elliott wave 1, 2, 3, 4, 5. Once it makes the 5 count, you should be expecting a breakout. Either a breakout to the downside or a breakout to the upside. So once the Elliott wave was complete, I knew 1, 2, 3, 4, 5. Hence it was complete. I was expecting a breakout. Now don't stress yourself about Elliott wave. It's not necessarily must be 5. Sometimes it is lesser or it is a pattern. So I waited for a breakout. So at this point, it broke out. It broke out at this point here. Now, if I was not careful and I said, okay, since it broke out, that was one of the things that happened this week on Friday, that GBP USD, the breakout. We just shared the breakout. We did not wait for a retest. Because whenever I break out, it breaks out. About 80 to 90% chance that it's going to retest before it goes up. So a break of structure, it's a downtrend here. You can see it is going down, it is descending. So whenever you have a break of structure, it means that the trend wants to change, right? It means that the trend is going to change. So when it breaks out like this, broke out, what naturally everyone would do, everyone will just enter at this point, but the smart money would drive the price down to take their stop loss. But if I enter this trade, even if I entered at this breakout, even if I entered here, where I'm going to set my stop loss, I'll set it at the recent low, which is this point here by this place here. So even if I set my stop loss here, you see it wouldn't have taken me out, right? Because even when price came down, it didn't get to my stop loss, this which is this point. When price came down, it still went up. But always, whenever you see a breakout, you wait for a reversal pattern, right? What does a reversal pattern mean? It means like a doji candle. What are reversal patterns? A pattern that shows you that the price is reversing. So if you look in here, what do you see here? What is this? This is a doji candle, and a doji candle is always showing reversals. And what confirms that a doji candle is reversals? You see either consecutive green candles or an engulfing candle that engulfs the first two or three previous red candles, a bearish candles, right? So this is a doji here, and you see this long bullish candle up onto this side. It engulfed this particular candle, engulfed the two previous bearish candle. This particular bullish candle engulfed the two previous bearish candles. When it engulfed, I could have entered here. So this is a confirmation. Whenever you see a breakout, just wait for a reversal pattern. So if I entered here, I didn't take this trade. I don't know where I went, what I was. Maybe I was busy. This happened about 2 or 3 weeks ago. It's been long. Okay, this was in November. It was in November. Okay, that was last year. So I'm just showing you. So but I actually saw this. I actually drew the pattern myself. This has been on my chart. So I wait for it to break out. Even if you missed the entry here, you can see that it still retested a bit when it broke out. It retested before it went up. Now you can see how many pips this is, how much one would have made if you had entered here up until you would have just traded it swing from December. See, from November, this trade from November up until this point, December 22, December. You see, this is where, see how long, how many pips one would have thought. Sorry, my sister call just came in. I have to pause the video.